Good morning, everyone, and welcome. Thank you for joining us this morning, particularly at this time on a Friday in January. For those who don't know me, I'm Jo Davidson. I am the Director of Policy here at the Edinburgh Chamber of Commerce, and it's my great pleasure to welcome you all this morning to our virtual budget session with PwC. The purpose of the session this morning really is just to take you through some of the key elements of the Scottish budget, which, as you know, was announced yesterday by the Finance Secretary, Kate Forbes. The Finance Secretary said herself ahead of the announcements yesterday that this would be the most important budget since devolution, and given figures published by the Scottish Government this week, which show 7.1% contraction in our GDP since February 2020, and the Scottish Fiscal Commission forecast a 7.6% unemployment in quarter two of 2021, amongst lots and lots of other stats that I'm sure you'll all have seen, which are equally as sombre and which seem to be coming thick and fast these days. I think we can all agree that the stakes really couldn't be higher at the moment. And at the Chamber, we know only too well the reality of the current economic situation, both on our members and in terms of the economy in the city and the country as a whole. But what do yesterday's announcements mean for business in the current challenging situation? How should we unpack and interpret the measures that were announced and the possible impact that they'll have? Well, to hopefully address those questions and more, we hope this morning we've got two excellent speakers from PwC for you. If I can introduce first of all Susannah Simpson. Susie is Head of Private Client UK and Private Business Partner at PwC. She's on the Private Business Leadership Team for the UK, and she leads PwC's Scottish Private Business Practice. So we're very pleased to have Susie with us this morning. She's worked with entrepreneurs, privately owned and private equity backed businesses in her surely not 20-year tax career. And she specialises in all aspects of corporate and personal tax. She's a qualified tax lawyer. She joined PwC 14 years ago after a 5-year career with law firms in London and in Edinburgh. And Susie is joined today by her colleague Sharon Blain, who is Director of Financial Services Tax, again at PwC in Edinburgh. She's been with PwC since 1997, and again, surely not, and part of the Financial Services Tax team since 2000. In that time, she's worked extensively across the full range of financial services clients, particularly in banking and insurance. She's been part of PwC's constitutional change team since 2011, providing analysis on fiscal devolution across the UK and leading PwC's devolved taxes network. And she's currently the convener of the Scottish Taxes Committee at ICAS, the Institute of Chartered Accountants of Scotland. So hopefully you'll agree we couldn't be in better hands this morning. Before I hand over to Susie and Sharon, just a couple of housekeeping points and a note on the format today. After our speakers have talked us through yesterday's announcements, we'll open the floor to Q&A. Please feel free to ask questions in the chat function as our speakers are speaking this morning, and we'll pick those up in the Q&A session when we get to that point. Again, you'll be very familiar with the etiquette now, but please stay on mute if you're not speaking. And also just a reminder that our session this morning is being recorded. So without further ado, over to yourselves, Susie and Sharon.
Thank you, Jo, and hopefully everyone can hear me all right, or at least will wave at me if they can't. Good morning. As exactly as Jo said, on a rather miserable Friday, thank you for joining us. Sharon and I really are delighted to be with you to report back on what I would love to say is the highlight of my week yesterday in terms of the Scottish budget announcement. To be fair, from my little attic room on the frozen canal in Edinburgh, it was a bit of a highlight. But in fact, as Kate Forbes herself started her announcements to the Scottish Parliament yesterday, and the most important budget, as Jo highlighted, she did start to talk about invoking the Scotland-specific economic shock provisions, which, you know, as a prelude to a budget speech would have suggested it was really quite exciting. In fact, when it comes to the specific provisions around the fiscal arrangements, which is where we'll spend most of our time just in the next few minutes, it was a bit of a stopgap budget is how I would kind of focus it, around stability for today as a stepping stone for recovery and growth. And you wouldn't have expected much different, I don't think, from that, given the continuation of the very real and human impact of the pandemic, as well as the economic headwinds that we're all facing up to. So Sharon and I will have about 20 minutes only of a formal presentation. We may be slightly under that, or we can bore you longer if you really want it. And we'll follow that with a Q&A, as Jo said. And during that time, we'll try to, first of all, give you a short and hopefully simple overview of yesterday's headlines. And in doing so, also then move on to give you a bit of context and around the boundaries within which the Scottish Government are working on all of this, and what they can do around their devolved tax powers as it stands, and what they can't do, and indeed what levers they can and can't pull, and what goes back to UK Government. We'll then just spend a few minutes looking forward to what we might expect over the next few months as Rishi Sunak himself stands up on the 3rd of March to give his budget, and how that might impact Scotland's individuals and their businesses. So I'm going to dive straight in. I think you guys you're in charge of the slides for me, so I'll get you to pop them up on screen. Thank you. That is wonderful. And if you just flick on a little bit, there is, I'll tell you when to stop. There's a slide, oh God, there's a bit of me. Next slide is actually a headlines from yesterday, the theme being the stopgap budget. So support for business was absolutely at the heart of the budget yesterday, quite rightly. And the very welcome news, which hit the headlines today, around non-domestic business rates relief, and the extension of that to 30th of June 2021 for retail, leisure, hospitality, and the aviation sectors. Interesting, perhaps, that the Finance Secretary was able to pay for that from our own Scottish resources, because of the larger businesses, the retailers, like the supermarkets, who've been able to repay their rates reliefs and have done better than expected over the last few months. So, although it also allowed Ms Forbes to signpost that there should be or could be a further extension available if Rishi Sunak comes out and says the same thing as regards the rest of the UK rates, because of the impact that has on the block grant for Scotland. So perhaps more good news to come and more certainty. And in addition, the Finance Secretary talked about the reduction in the poundage rate for all business rates, so taking that back to 1920 levels, which does make Scotland competitive compared to the rest of the UK. Beyond that, there was a bit of an emphasis on healthier, wealthier and greener Scotland going forward. Sharon will take you through in just a moment the wealthier aspect, focus on the income tax position after yesterday, and I'll then pick up on the thread, perhaps more notable by its absence, around LBTT, land and buildings transaction tax, and indeed the confirmation yesterday that the current LBTT holiday in Scotland will finish on the 31st of March. And then in a year, the greener aspects, in a year when the world's eyes will be on Glasgow in November for the COP26 climate summit, we'll touch on those greener agenda points, and indeed more notable absentees from the statement. You'll remember air departure tax, aggregates levy, and the plan to assign half of the VAT raised in Scotland to the Scottish budget, and we can talk about where that is going, direction of travel. Sharon, do you want to take over on income tax and the current position on fiscal devolution?
Done the mute thing. Oh, amateur. Yes, we thought before we launch into the sort of detail of some of the things that Susie's just highlighted there, it was worth just standing back and giving people a very quick overview of how the devolved tax position looks across the UK, because there's an awful lot of moving parts. I think you can see from the relative size of those boxes, as it were, or the content, that Scotland is ahead of the rest of the UK in terms of the different fiscal levers that it has. I think it also demonstrates that it's a quite asymmetrical, quite messy sort of picture across the UK, with different parts of the UK having different powers and being on sort of different timescales. It's also worth noting, I think, on the timescales, that how long it can take to devolve some of these taxes, which are nominally quite straightforward. So the aggregates levy, for example, is not exactly a big or complicated fiscal lever, but it has been on the back burner really since 2014, when it was identified as a tax that should come up to Scotland as a devolved tax. But there have been challenges in the EU around state aid that have held it up, and now the UK as a whole has decided to have a review of the aggregates levy as a tax to see if it functions properly, if it's fit for purpose. So there doesn't seem much point progressing with devolving it until that consultation is over. If we look to Northern Ireland and the corporation tax rate devolution, that was due to sort of happen in 2018, but again is on hold because of circumstances in Northern Ireland changed, and now circumstances overall have changed. So it's just more difficult than perhaps we might anticipate to get a tax devolved into different places. Wales, you can see, very closely sort of shadows Scotland in terms of the taxes that are moving across to Wales. But again, what happens on paper is slightly different to what happens in reality. It's more difficult for Wales, for example, to start fiddling with their income tax rates without having more of an impact in terms of people who might move across the border. So whilst Wales has income tax rate changing powers, they have not chosen to use them so far. Their budget just before Christmas confirmed that as well. So that's just a little flavour of the circumstances that we find ourselves in different parts of the country, and a bit of a comparison between Scotland and the rest of the UK. If you want to move on to the next one, I think we should be, yes, income tax. So again, before we get to the actual rates, which are, as Susie suggested, not very exciting, I thought it is worth just recapping, because one of the things that comes out from certainly from ICAS's research and other organisations is people not quite understanding sometimes what Scottish income tax is and who's in charge of it. So I just thought it was just reiterating some of the key points. So it only applies to Scottish taxpayers. There's a whole raft of discussion around what is a Scottish taxpayer, which we could get into if we have any questions. It only applies to non-savings income, so it applies to employment, trade profits, individual trade profits, pension income. It doesn't apply to dividends and interest, so any savings income, the UK rules apply to that. We have now, since 2018, have diverged from the UK, more significantly recently with our 5 bands. Collection is via HMRC, so everything about the collection sits with HMRC rather than with Revenue Scotland. Revenue Scotland just deals with basically LBTT and landfill tax at the moment, which is why for most people you won't have seen much of a change in terms of how your income tax is collected. The only change will really be the little S in front of your tax code to show that you're a Scottish taxpayer. And when you self-assess, there's a little box that you tick to say that you are a Scottish taxpayer. Various other things that sit with the UK that are important include the personal allowance, which is set at a UK level, and of course all the other taxes that affect individuals, like capital gains tax, inheritance tax. They all sit completely with the UK. So we do find sometimes that there's and national insurance actually as well, which is a very important one. There's some interactions between the two systems, between the UK and the Scottish system that can throw up slightly unexpected results. But say that's just a quick overview to remind people of what we're talking about when we speak about Scottish income tax. If you want to flip on to the next one. So middle column here, we have where we currently are, which should hopefully be familiar to people. On the left-hand side, the UK taxpayer column. This is what will be happening as far as we know from April in the UK. Whilst there hasn't been a budget in the UK in the autumn, as there usually would be, the spending review did contain detail of what would happen to the personal allowance and the higher rate threshold. It didn't mention any of the other bands or rates, but it did say that the personal allowance and the higher rate threshold would be increasing in line with CPI last September. So, and there's a bit of rounding up that goes on with that as well. So the personal allowance is expected to go in the UK from 12,500 to 12,570 come April, and the higher rate threshold go up slightly from 50,000 to 5270. We won't know until March whether there's any other changes in that column. So at the moment, we're just assuming that that's what the current position will be. The position in April will be for a UK taxpayer until we hear otherwise in the budget in March. And then on the far right column, we have a sort of combination of what we expect from the UK changes, which is the personal allowance going up slightly, and the rates from April, which have not changed at all, as kind of expected. There's not a lot of scope really for making dramatic changes to those at the moment, so they sit as expected. and slight changes in the bands that are within the control of the Scottish Government, just to increase those slightly by inflation, apart from the 150,000, which in both the UK and Scotland has remained the same for a good few years now. So there's very small changes pretty much as expected. The result of that is a very small decrease in income tax for most Scottish taxpayers. We're not talking about a big amount. We're talking sort of £20 here or there, really, maybe up to about sort of £60 at the very sort of, towards the 100k sort of level. So small amounts, but for those of us who are Scottish taxpayers, perhaps going slightly in the right direction. If you go to the next slide. So one of the interesting comparisons that we always try and make is would you pay more if you were in the rest of the UK than would you pay in Scotland? And the finance minister, Ms Forbes, did state in the budget documents that 54% of people would be paying less in Scotland than they would be in the UK. The break-even point, the point at which you would pay more in Scotland than you pay in the rest of the UK, has moved up slightly just because those bands have moved. So effectively, if you have a taxable income under 27,400, roughly, you will be paying less in Scotland than you would elsewhere, and above that point you'd be paying more in Scotland. It's probably worth saying that the amounts by which you're paying more or less are really quite small. So for example, if you had taxable income of about 20,000, there's about a £20 difference between Scotland and the rest of the UK. If you went up to sort of 30, 40,000, you're talking maybe £100, £150, that sort of scale of things. So it's not that there's a big difference until you get up to the sort of more the more levels of taxable income around the sort of 50, 60,000 before it starts to make what I would say is a difference of £200, £300. It starts to be perhaps a more substantial amount. But that's just one of the numbers that will get bandied around, is the break-even point. Next one. Okay, I think we're back to Susie for some LBTT.
Thanks, Sharon. Yeah, I've just included on this slide a bit of a sort of an overview and comparison of where we are on SDLT, stamp duty land tax, versus land and building transaction tax, the Scottish equivalent. The headlines yesterday were really focused more around the announcements that it was confirmed that the current LBTT holiday for residential purchases up to £250,000, they've now pretty much, well, it's certain that it won't be extended. It is interesting that they're pretty committed on this approach, despite the possibility that Rishi Sunak could stand up on the 3rd of March and decide to extend the holiday for the rest of the UK, so south of the border. But the Finance Secretary yesterday has sort of pinned a banner to the mast in terms of the Scottish position. So some certainty on that. If you can just flick on to the next slide, just again, a bit like Sharon, a sort of reminder of where that leaves us on that in that case. So as a result, we're back to, from the 1st of April 2021, the ceiling of the nil rate bands being 145,000. Bear in mind, for first time buyers, of course, there's a first time buyer relief, which takes them up to a nil rate band of 175,000. But then as we move on from that and into the 5% rate band, actually LBTT ramps up quite quickly in comparison to SDLT to move into the 12% top rate, high top rate, at the level of 750,000 rather than 1.5 million in the rest of the UK. There was a commitment from the Finance Secretary yesterday to look at continued consultation on reliefs that are not currently available under LBTT, but are in certain circumstances available under SDLT. So that's a welcome commitment to kind of continue to consult on that, and also to look at additional dwelling supplement, which currently stands at 4% in Scotland as compared to 3% for SDLT. And she's committed to continue to look at things like, for instance, the relief on the sale of your only or main residence, which has a look back period of only 18 months in normal circumstances rather than the 3-year look back for SDLT. So continued consultation on that, which is welcome. Otherwise, no huge changes. And just flick on to the next slide if you can, and nothing at all in terms of non-residential LBTT rates, which are certainly less differentiated than those residential ones for SDLT. Sharon, do you want to pop on to other devolved tax areas?
Yes, so we thought it was just worth having a look at some of the other areas that didn't get much discussion yesterday, apart from on business rates. So the air departure tax, this is our new air passenger duty. This was due to be devolved to Scotland, and to, well, it has been devolved to Scotland, but it hasn't actually taken effect yet. It was due to come in April 2018. One of the hiccups is state aid. And EU issues around the subsidies to the Highlands and Islands for flights within the Highlands and Islands to be heavily subsidised. There's been a challenge around whether that's state aid, which has held it up at the moment. Again, there is now a challenge across the UK to say, well, what should we be doing with air passenger duty? It's a very good example, although a small tax, of just that conflict of interest between what a tax should be doing, because on the one hand, there was a hope both in the UK and in Scotland that we could reduce APD and air departure tax to nil, and to use that to boost connectivity, to encourage economic growth by encouraging that connectivity with the rest of the world. On the other hand, there's a clear climate change issue with encouraging flying. So the Scottish government has sort of backtracked on some of their original plans to reduce it. I think the UK government is in a very similar position. So that's very much been parked at the moment. But even though a small tax, I think is quite a good one to illustrate just the challenges around tax policy, where you've got two quite conflicting agendas there, really, about what the tax could or could not achieve. So that one has at the moment been parked. The workplace parking levy and transient visitor levy were ones that were introduced last year, in that the Scottish government has given the powers to councils to introduce these levies should they choose to, and certainly Edinburgh was looking at, I think, both potentially, Edinburgh Council. They seem quite quaint now in the current circumstances a year on. That tourism would be a welcome thing, and the idea of parking at a workplace and actually going into it would also be a bit of a novelty. So those two, again, they have been passed. Councils would have the powers to introduce them, and whilst again it would be tempting for councils because they are sources of income, and a council would be very keen on those sources of income in the current circumstances, they are not particularly, say, the transient visitor levy is perhaps not going to be an attractive option in terms of resurrecting the tourist sector at the moment. So again, nothing's happened with those since last year. Council tax was mentioned in the budget, and this is again quite a welcome one, in that councils have, again, in their need for funding, been raising council tax as far as they could do. It's been capped at about 4.8% in terms of raising council tax, but councils have been using that power across Scotland. And the Scottish Government announced yesterday that they would fund councils an additional amount should those councils choose not to raise council tax. If they choose to freeze council tax, given that it has quite a significant impact on the living expenses, particularly of those in the sort of lower income bracket, that the Scottish Government would provide additional funding to enable councils to freeze their council tax, but still have some kind of topped up income. So yeah, council tax was a small feature of the budget yesterday. Business rates, I think Susie's touched on at the beginning, that welcome extension and possible further extension depending on what happens in the UK government to the relief for retail, tourism, aviation and hospitality, and the reduction in poundage, which was made much of because it's the first time it's gone down. It's a rate that just keeps going up and up and up, to go down even just back to the 1920 rates, was certainly something that I'm sure businesses who are paying business rates will be very happy about. VAT is, again, a bit of a saga. VAT was supposed to be assigned back, or a proportion of VAT is supposed to be assigned back to the Scottish Government based on the Smith Commission agreement. And that was due to happen, I think, last April, or to start happening, and then was shelved for a year, and now has been, shelved until further notice. The main difficulty has proved to be working out what is the VAT raised in Scotland. The Treasury has found a way of doing it, but that wasn't one that the Scottish Government was happy about. It is actually quite difficult to allocate VAT across the country. The reason that VAT was being assigned back to the Scottish Government was to do with the EU again, because VAT is a Europe-wide tax, and it was not permissible to devolve VAT to part of a territory. which is why it was being assigned back. So it was going to be a UK tax, but a proportion of the income would go back to the Scottish Government. So there are, I suppose, two open questions on that, one of which is finding a way to allocate it properly, and that's been rolled up into the fiscal framework review, which will take place this year, which is a review to how the block grant functions in compared to devolved taxes, but also a post-Brexit question of, well, could VAT be fully devolved to Scotland and have our own sales tax? So neither of those questions are very straightforward, and I think it's not going to be a quick fix to decide either way, and may depend on other things that may happen in the next couple of years. So VAT and a number of those other taxes parked at the moment. I think they all indicate in their own ways the difficulty of coming up with a devolved tax system which is coherent and really functions to the benefit of both governments. I think that's it, Susie.
That's perfect. That's great. And we just thought I'd come to sort of towards the conclusion with a look towards future UK government and more broadly tax policy, just as it impacts Scottish individuals and businesses and could impact over the next 6, 9, 12 months. Clearly never a day goes by without some further debate in the media about raising tax to pay our way out of the current crisis. And that sort of speculation, and for us as tax advisors, we're suddenly the most popular people at dinner parties, which is typical that we can't have dinner parties at the moment, because that's never happened to me before. But it really is, for us as tax advisors, it really is speculation. That is all it is. There is no certainty. We've had a series of think tank reports, from one on inheritance tax well over a year ago now and pre-pandemic, to the OTS capital gains tax policy report just prior to Christmas. And indeed the wealth taxes think tank report also just prior to Christmas. If I start with quickly personal taxes, and we've already covered, Sharon's already covered the sort of interaction between UK personal allowances and rate bands and the Scottish taxpayer. The key area being debated around the March budget, which my view is probably more likely to be a November or an autumn statement, whenever that may be, that tax changes come through, because we're right in the middle of lockdown, so it's hard for Sunak to make big decisions on that just now. But the key area is really around capital gains tax, as we've touched on already. So the OTS proposals debate those pros and cons of just equalising the income and capital gains tax rates. It's worth remembering, as has been said a number of times, the total tax take from capital gains is only, depending on figures and years, only about 9.5 billion, which sounds like a big number, but in comparison to other taxes, it would suit public perception to do something about that, but wouldn't make a huge dent in the public debt situation. Taxes on individuals and the self-employed, however, the crisis has shown that there is a welfare safety net for those individuals, and the government's already indicated that it'll consider further tax and national insurance contributions from the self-employed, perhaps through a PAYE type deduction at source system. So that's something that may well impact Scottish taxpayers as much as those in the rest of the UK. Corporate taxes, there's a logic to this, to increase those, given particularly some sectors have benefited during the pandemic crisis, for instance, technology. But on the other hand, Rishi Sunak will want to keep UK PLC as competitive as possible, particularly as we come out of Brexit. So there's a balancing act to be done there. And wealth taxes, clearly, again, another way to equalise the inequality, particularly for lower income households who've really suffered during the pandemic from a financial perspective. But again, I was always of the view that introducing a brand new tax at this stage, structurally, cost-wise, administratively, was going to be hard. Having said that, the think tank reports, if I was the Chancellor reading that, and it does put a headline number of potential 260 billion raised from a one-off, not an annual, but a one-off COVID wealth tax, which might just be 1%, that was their calculations, 1% on net assets over 500,000 and payable over 3 years. It would, it is a large amount of money and could pay off quite a big chunk of the debt, if not the deficit. Digital and environmental taxes, sorry, I'm popping around that wheel in probably the slightly wrong direction, but digital services businesses, clearly, again, as everyone's use of these platforms during the pandemic have accelerated, back to that fairness argument, why would they not use some of those profits to pay our way out of the crisis? And from an environmental taxes perspective, it's clearly behavioural, incentivising against harmful environmental behaviours, but incentivising for greener alternatives. And finally, to bring us right back into Scotland and the levers that the Scottish Government do have within their power around local taxes, as Sharon's touched on, many of you won't have missed the Scottish Land Commission report that was published just pre-Christmas, and there is now a working group established on that, and that's talked about potential for land value tax again, that's been drifting around for a while, those proposals, reform of agricultural property relief, which is the relief from inheritance tax, council taxes, making those progressive, and possible derelict land taxes in new enterprise areas. Now, all of those things, it's quite right to examine them, and the working group will continue to do that. But it is very important to think about not just the political drivers for that, but also the unintended consequences. So, for instance, agricultural property relief impacting rural farming family businesses is probably not a good thing. And indeed, the lever for that isn't within the current devolved powers for the Scottish Government. And a land value tax or derelict land tax, which impacts urban land as much as rural, it could be quite far-reaching. If you just pop onto our very final slide, and I'm conscious of time, so I'm going to shut up. But just to end on a positive note, really, we do an annual review, and this one's actually come around just right in the middle of the last few months on as a sort of public sentiment review. We interviewed 2,000 adult individuals across the UK. And the results were quite stark, particularly for Scotland as a kind of heartland for growth going forward. So something for both the Scottish Government and the rest of UK to bear in mind. It does highlight on the list of those cities which have shown the most resilience, slightly surprisingly for me, to be honest, during COVID-19, was Aberdeen and ourselves in Edinburgh, of course. But despite that oil price ongoing price challenge, Aberdeen, is forecast for quite significant growth going forwards. And indeed, in Edinburgh, Inverness and Aberdeen remain the top 3 cities for growth scores in all of the devolved administrations. So I just thought I'd share that to end on a sort of glass half full note as I hand back to Jo.
That's great. Thank you both so much for that. Obviously, quite a complex situation, possibly more complex than many of us realise. So thank you so much for walking us through that in a way that I think lay people will be able to understand, which is always very helpful in these situations. I don't particularly want to sort of hog the Q&A session. I would like to open the floor now, if possible, for any questions. We haven't had anything come through the chat yet, but if you would like to raise either your physical, because I think there's enough of us today that we can see most of you, either your physical hand or your electronic hand, as I'm sure we all know how to do in the chat now. Happy to take any questions for Susie and Sharon, or anything more generally that people would like to raise or comment on, even if it's not even a question, if you have a particular comment on what we've just seen or heard, or anything that was announced yesterday. Can I open it up, please? Does anyone have anything to ask? Andrew, are you asking a question? Sorry, yes. Andrew Morrison.
Yeah, hi Susie and Sharon, Andrew Morrison from AMBID. It was a question really on the final slide that sort of piqued my interest about Edinburgh projecting increase, because it does seem that so many of the things that Edinburgh is strong in, like tourism, retail, financial services obviously may have some impacts from Brexit and also offshoring. What do you think is driving the projection of the 3.9% growth? Is it tech, or what is it?
I think you're absolutely right. I think the technology is a big thing in there, but when you bear in mind that sort of public sentiment, I think it's just quite positive that people see, as a capital city, the return of tourism over the longer term. We're looking out in those figures sort of beyond the end of the pandemic, gosh, as soon as we can have it. So I think it is that kind of financial services hub, even post-Brexit, technology, and the return to retail, food and drink still doing very well for the sort of surrounds from Edinburgh. But yeah, I think it's kind of, it's a positive vote for the return to what we've always been good at, and that's still being good when we come out of this pandemic.
Yeah, I actually think that we'll come out very, very differently. I think a lot of the changes that have been made will end up being ironed in. So, I think a lot of, the retail will stay with, people getting deliveries online to their home. And I think tourism, maybe, I think there's going to be a huge desire to get back on holidays, etc. But I think that some of the prices that were being charged before may have to come down a bit. I also, speaking as somebody who travelled to London on business every month or sometimes every week for the last 15 years, that was driven by my clients. They now understand that I don't need to be there physically. So I think a lot of the business travel will actually be affected. And do you know what? I've got to speak personally. I'd much rather be working from home some of the time than making all these journeys on trains and planes, etc. Maybe it's just because I'm kind of in my kind of mid-50s that I'm feeling that way. I would be happy doing some business travel, but I'm not going to be doing nearly as much business travel as previously.
I think, and I will just sort of completely agree with you on that comment. And across our very large employee base, we've seen that, quite significant moves where people during the pandemic have decided they can work from home, and actually therefore they will move to Scotland or out of London to, to other centres around the country. But Scotland will benefit from that, as people can be more flexible and not travel into London. So I think, yeah, that's one of those factors that will draw people here, I think.
I think potentially another factor in those numbers for Edinburgh is the proportion of the employed workforce who have been able to work from home. So to that extent, I think maybe Edinburgh has been, or individuals in Edinburgh have been less badly disrupted than perhaps in other places, because a large proportion working in that sort of financial services area have just worked from home. Though I would entirely agree, my plans for travelling to and from London are much the same as yours now, which is the fewer the better.
Yeah, and I think taking Andrew's point, I mean, we obviously saw the Good Growth for Cities report and read it with much interest. I think, it's hopeful to think that will be the reality in terms of how things recover. I think for those of us on the ground at the moment, and Andrew, we know exactly where you're coming from. I think it was quite surprising. Those were quite surprising results, because I think for those of us on the ground at the moment, it doesn't feel as hopeful perhaps as the report suggested. But fingers crossed that that it's slightly more hopeful than it feels, certainly at the moment, being on the ground and in the city and moving around it at this point. Does anyone else have any questions for Susie and Sharon, or any comments to make? Thank you for that, Andrew, for that question. Anyone else? Harriet, I see you with your hand up.
It's just sort of what Andrew said about how there's been this huge growth in online shopping, and that's likely to go forward. And I know you touched about sort of a tax for online retailers and things, but just with historically how that's been quite sort of difficult, I think, to sort of tax like Amazon and Google and these sort of big online giants. How likely do you think it is that there'll be sort of an increased tax, and how effective do you think it'll be?
I think that is one of the single biggest and most difficult questions that we're facing around the sort of corporate tax. There's two sides to it, I suppose. There's those who are reducing tax on retail, and the whole question of business rates and is it fit for purpose, which I think is a very live question. And the Scottish budget yesterday did kind of reflect that challenge for physical businesses, even absent the whole COVID thing. The question of how to tax digital business is, currently sitting at the highest level it could be, which is the OECD, which is the Organisation for Economic Cooperation and Development, which is supranational, which is trying to find a solution. And what they're coming up with is quite radical. And that probably is the only route to find a solution that really works, which is to do it at that level, which is more to sort of say, we're not worried about where you're located, we're worried about where you're selling, and actually apply that as a different principle. So enormous progress has been made on that in the last few years, but it could be the end of the year before we see how that plays out. And I think that will be that's one that's very much discussed as within the tax profession rather than in the public, and bringing those two bits together, which is, does it work for people who are actually on the ground and have a retail shop and who are doing online shopping is a very difficult question. And I think we're moving towards an answer, but it's slow progress. And the Americans don't like the solution that the OECD is coming up with. And just yesterday, they announced that they view the UK's digital services tax, which was introduced to try and deal with this on just a UK sort of basis, is unacceptable to them. They think it's unacceptable targeting of American companies, and it's put them in a position to say they could put tariffs on UK goods or make some kind of retaliatory action, which is why it doesn't work unless you go right to the top level and do it across each nation. because what it ends up meaning is the US get less tax, their companies pay more tax, but not in the US, so they don't like that. So yes, it's a whole can of worms, I think I would say.
Thank you, Harry. Any other questions or comments for Susie and Sharon? Charlotte, hi.
Hi. Yeah, thank you for your presentation. It was really interesting. I wondered whether you might be able to speak a little bit more to the slide that talked about, the 5 different kind of future options for taxes. I wondered whether it might be possible, even just kind of a rough guide to kind of estimate what kind of tax revenues those kind of potential changes might make.
So I can't give you the numbers top of my head, I'm afraid. I would love to be able to start those, and actually it changes year on year, clearly. However, a bit like I kind of noted, so the personal taxes, income tax is always the biggest revenue raiser, along with national insurance contributions. There's been an awful lot of conversation out there about the pensions, the higher rate tax relief into pensions. And actually, cancelling that would add a significant chunk to government revenues overnight. So it's areas like that which will really make a difference. The difficulty is, of course, that impacts people across rate bands and in the lower earning households just as much as the higher earning households. So that's why the government, needs to look at other areas. There's the behavioural bit around environmental taxes. The difficulty with environmental taxes, of course, is that the tax take goes down as the tax has an impact, because people start plastic bag tax, whatever, limiting their use, and therefore longer term, it's not an answer to significant revenue raising. It might be in the shorter term. So to the point I made a bit earlier, there's been a lot of focus on capital gains tax raising. Wealth tax might be a one-off, but it's quite a big move to do that. And you may well get the individuals who are wealthy enough to vote with their feet and leave the country. That's probably not what we want to do as a broader UK. But overall, it's the sort of income tax which is the big whammy. They've got this triple tax lock that was committed to by the government when they came into power. So their sort of ability to move those tax rates, unless they abandon that, is quite difficult. So we'll have to see where they go with it. Ultimately, they need to kind of keep us, competitive on the global stage going forward. So yeah, it's going to be. I wish I could reel off all of the figures, but yeah, that's in broad terms. I think that's where they'll aim things.
Yeah, and
Sharon,
I think
do you add in? Yeah.
Yes, I think the thing to remember is that about 85%, I think it is, of
I knew you'd have the numbers.
Payers. No, I'm saying vaguely it's 80 something, might be 85, 86, but of all the taxpayers in the UK, 85, 86% are basic rate taxpayers. So the single biggest and simplest way of getting money is to put a penny on the basic rate of income tax. That, I think, in terms of scale, like I say with Susie, I don't have the number, but in terms of scale, that's by far the biggest impact. But yet that is probably the least likely in a way, because that politically doesn't work for anybody. I think the other thing to remember about wealth taxes is, for almost everybody in the UK, wealth consists of either the house that you own or the pension. And if you took those out of any wealth tax, on the grounds that the government's been encouraging people to put money into pensions, and your house doesn't generate income, then you've got very little left to tax. So I think part of the practical problem that Susie's alluded to with a wealth tax is, what do you include in it? And if you strip those out, again, 99% of us don't have much beyond that, if anything, or perhaps an ISA, which again is a tax benefit that's been given to people to encourage them to save. So yeah, the scale of some of these things that are under discussion is very difficult to assess, but also things that get most attention are perhaps the smallest actual cash impact, sadly.
Thank you for that, and thank you, Charlotte, for your question. I wondered if I could ask something. One of the, obviously you mentioned that, and I know, and we know this too, that obviously all eyes are going to be on Rishi Sunak when he stands up in a month or so's time, and talks about also what's going to happen at a UK level. And we actually, so obviously at the Chamber, we have made a number of asks, both of UK and of Scottish Government, as you would expect, ahead of both budget both budget announcements. And obviously, pleased to see yesterday the focus on business support, although obviously the devil will be in the detail of that in terms of how that actually plays out. But in our conversations with Ms Forbes and with Fiona Hislop before the budget was announced yesterday, what was made very clear, certainly from Ms Forbes' perspective, was that much depends on the announcement that is made by Rishi Sunak in terms of consequentials, and particularly one of the things that we're pushed for was that extension of business rates relief, which we're pleased to see was announced. But any further extension of that, she made very clear, would be dependent on the consequentials coming through from Westminster. One of the things I wondered then is, and I know you've given us some sort of outline of your forecast in terms of tax longer term, but is there anything you think will be in the UK budget in March? Anything you're anticipating seeing? Anything, any conversations that you guys might be having? Because I know you speak to government, obviously, and advise in that capacity. Is there anything you're aware of that might come out in that would be useful? Sorry to put you on the hop. I know that's quite.
No, it's fine. I'm going to give an honest answer, and clearly we're, as the other big four, we do advise the government on various areas. But and I sort of speak for, we've got the likes of Gavin Barwell, who's the ex chief of staff for Theresa May, is now a special advisor, and speaks quite often with us. And I link in through my private client role with our tax policy team. It's none of it is it's funny that there is nothing coming out in terms of leaks. When I sort of said it's all speculation, it really is, and anyone who sort of tells you otherwise, and that sort of hand on heart, heavens, unless there's been some line in overnight as a result of the Scottish budget, that I don't think any of the other, certainly big four, would have any other insight. I think partly because it is such a difficult problem. No one would be Rishi Sunak in I certainly wouldn't be in his current shoes. He's dealing with a lockdown. He doesn't know how much the debt is that he's got to pay off, and actually he hasn't got a lot of levers to play with until it becomes clear as to how the economy is recovering. And there's some sort of positive signs that the double dip recession doesn't seem to have either been as bad or certainly occurred as it has before. So I think my view, he will wait. And continue to weigh things up right up until the last minute. But Sharon, sorry, not to be more helpful, but my honest belief is it's all speculation. And if we listen to any of it, you do at your peril to take it as certainty. There's no harm in speculating.
Yeah, and I think, as Susie suggested earlier, this budget, the March budget, may not be the one where we see changes.
Yeah.
I think this one could well be very similar to the Scottish budget in that it's a safety first, stability. We're not going to change anything. We just need to keep businesses afloat. Hope the recovery in the next 6 months starts pushing through as the vaccine takes hold, and by November, then the very hard choices as to how are we going to pay off the amounts that we've had to spend. And I think that November could be a more interesting one. And I think not to go down this route, but by November we may have a Scottish government that's pushing in one direction, and things may look a bit different politically as well. So I think November could be a more interesting one than March, which may be a safety first one. But again, speculation.
There's an interest. Sorry, and I will shut up after this. But there's an interesting other alternative view here that we've sort of been discussing, and interested in other people's views. I can't remember quite the figures, but we've only just, as in last 10 years, paid off the Second World War debt. And that's effectively the level of debt that we're looking at from the pandemic over the last 12 months. So there is an argument economically for not trying to pay it off and just within a low interest rate environment carrying it for decades to come, but continuing to carry it and actually focusing on. Someone described the economy in the UK as a bit of an undergraduate. Why wouldn't you sort of spend if the debt is available? The whole of the globe is in the same position pretty much. And obviously slight differentiations, but there is just an economic question around, is there a need to make big dents and pay off, or just stimulate growth and keep going that way? It's maybe controversial, maybe I'm not allowed to say that.
No, I think I think all eyes then will be on what Rishi Sunak says when he stands up in a few weeks' time, and we'll watch with much interest. Does anyone else have any sort of final comments or questions for Susie or Sharon, or should we kind of start to wrap up now, and we're kind of getting towards time. Anyone else? Anything they'd like to raise? No? Okay, well, thank you so much, Susie and Sharon. As I said, I think it's such a complex situation, and I think being able to understand the powers and levers and boundaries that our governments are working in at the moment is really, really helpful, and certainly helpful for our understanding and for our understanding of engaging with governments and policymakers on our members' behalf. So thank you so much for taking us through that this morning, as I said, in a way that hopefully most of us would have been able to understand and follow, and actually made sense and was relevant, I think, to our situation. So thank you so much for that. Can I also thank all of you for attending this morning and for your engagement and for your contribution. As I've said, we are continuing now that the Scottish budget has been announced. We at the Chamber will obviously continue to monitor how the measures that Kate Forbes announced yesterday will actually be implemented, and what those will actually mean in real terms for our businesses and for our city. So we'll keep engaging on that, and we'll keep pushing on that in terms of making sure that commitments that were made yesterday, particularly on the business support side of things, are made good and are improved upon where and how they can be. But also, as an accredited member of the British Chambers of Commerce, we are continuing our engagement with Westminster Government through that body in terms of our asks for businesses at national level, and where there are national policies that impact on Scottish businesses, that we are pushing and lobbying hard for our interests in those conversations. So please keep engaging with us, and please keep an eye on our weekly newsletters and on our website for updates of that as and when those things are announced. And can I thank lastly the Chamber team who've pulled this all together. Thank you so much for your support today, and for making sure that all of the technology worked, which is no mean feat, I think, in the current situation. And just one final plug. You'll have seen hopefully some comms on this, those of you who are members, but we have our business festival coming up in the first week of March. And as part of that, we have our awards programme as well. We're not able to do our big 500-person event at the EICC as we normally do every year, where we make merry, unfortunately, obviously due to the current circumstances, but we are still going ahead with the awards programme, because despite the fact that we know there are very significant challenges facing our community at the moment, we also know that there are many things to celebrate, and we intend to do that at that event. So please take a look at the awards. Closing date for submissions is the 6th of February, I believe. Rebecca will draw me a stern look if I've gotten that wrong.
4th of February.
4th, I knew it. 4th of February. So if you'd like to submit for the awards, please do so. And please also book your places at the Business Festival. We are putting that festival on for free this year, just because we're cognizant of obviously the difficult situation that many of our members and businesses are in. So please come along to that, and you can find out more about that at our website, which is www.edinburghchamber.co.uk. So with that, I will thank you once again for your attendance. Thank you to Susie and Sharon, and hopefully we'll see you at another Chamber event very, very soon. Thank you very much.